Let's begin. Start the recording, and let me. Oh, you don't see the screen. Why now? What did I do? What's going on with here today? No, should be back. All right, great. So let's begin. We have many things going to the plan, the bottom line, and it's time to cover them and prepare ourselves for the next few possibilities to trade around. I just want to answer a few questions we already have, gold and silver. Joseph, exactly as I explained yesterday, this move is exactly what we wanted to see. For me, it doesn't mean that I'm going to trade it. It is a correct move, technically, to complete this double cycle and this double cycle into magnet zone. That's exactly what we discussed yesterday, right? And to trade the shorts for those of you who trade the short term. I am going to watch for this place to look for longer term buys. That's all. So the gold is following its own levels, and I want to remind you quickly that's our levels. I heard I thought you were asking about Fibonacci retrace. 1236. I am doubtful. I might be very wrong. I'm doubtful. At least as for now, I don't see that going below than here, or the biggest case, 1270. Again, I might be wrong. Just my view. Bearish to these places. It's okay. But from there, I wouldn't waste my time. Silver, that's exactly what I'm looking at as well, right here. That's the level. That's the level. 1 plus 1 normally is 3. No, just private joke with my kids. So here we are, right? The zone and the breakout. That's what we expect. Okay, so that's all for the gold and silver. Basically, unchanged, following the plan exactly as we have. The short-term retraces still continuing. The later on, with the levels, we'll be looking for buys. Okay. No, Yosef, it's only you. Now the sound is okay. Okay, Andrei, very good. Kostas, welcome on board. Okay, guys, so let's continue. What do we have from the other pairs? Euro dollar. Euro dollar continues its short-term move down. As we said yesterday, let's get the breakout of these two waves and the lows. Once we got it, the euro dollar got the continuation. So we got a pullback. The stop loss here is pretty big for the 1 hour chart. Got yourself the pullback and got another breakout, second breakout, right? And we continue lower. No, nothing changed there. Nothing on the short term. Nothing for the long term. The plan is on the short term is still running bearish trade. Yes, it's a bit more aggressive because we still don't have a break of this low. Once we do, it becomes much safer, of course, according to the daily cycle. So that's the bottom line. Levels for the watch is right here. That's the 61.8 first of all, and 161.8 possibility for later on. So the plan is running on seller traces, was and remains the plan. Pound dollar, we're bearish here as well after the triple double, unchanged so far, exactly to the plan. That's our trend line that we are following. It was bouncing there 4 times in the row. Okay, so it is bearish, it goes bearish, it remains bearish. I think nothing else to say. Okay, So the possible targets for the pound dollar, of course, are the cycles that are expanding. This is the first one we have. This is the second one we have. The levels there, the duplication level. Well, we have the first warning sign and a possible divergence. It's just a warning sign and possible divergence. The next levels are here and here. That's where we want to see the pound dollar to. From there, most likely would start looking to buys, but it's too early to discuss about that. As long as the trend line holds and we continue to create the lower lows in the bigger view, and now in the shorter term, ideally, the pressure remains bearish. That's all. Nothing changed for us here as well. We were bearish, we remain bearish. Euro pound, we were what? Bearish, and we remain bearish, right? Yesterday, we were talking about the retraces. And here today I want to discuss about it and show you how it develops, guys. Yesterday I was talking about ongoing trend. Remember, when the weekly and the daily gives you the same, right? And our direction according to weekly, according to daily is the same. The retraces could be in two waves, or who can help me here? Or what is the second possibility? Range. Thank you very much. It could be a range. Or an ongoing trend, and that's sometimes what we face, a bearish hidden divergence. A bearish hidden divergence, right? Now, because we've had the 4-hour chart bullish divergence before, we wanted to see this pullback on the 4-hour chart, and we wanted to see the two waves range or a bearish hidden divergence on the 4-hour chart. 1-hour chart in that cases will represent most likely the confirmation, and in our case, two waves up, trend line, and the bearish hidden divergence right here. So the euro pound continues on its bearish confirmation. If you want to go lower and make it even more conservative, no problem, same idea. The false breaks have to be there, and once the false break are there, you can mark yourself the last trend line on the last time frame you are working with. So the euro pound is bearish, and our view was and remains the same. Okay, we are bearish as long as this low, this high holds. Okay, the 1-hour chart, why not? First move, second move, two candles rule are in play, why not? Even these two candles rule are in play. Why not? I remind you, you are not trading the 1-hour chart retraces. The 1-hour chart for you is just a confirmation for the 4-hour chart bearish hidden. So you are joining this trend, right? The 4-hour chart is your divergence here. Okay, Andrei, I agree with you. The 15 minutes in that cases is, well, I wouldn't say safer. I would say more profitable because you're asking less pips. You are right. In terms of risk reward, you're 100% right. In terms of risk reward, yes. But it's always the question, what kind of trader you are, right? And what kind of trading you apply. A bit more aggressive on the lower time frames. So that's called squeezing. What's done in that case is squeezing. You go through all the time frames to find the ultimate entry. That's the idea of squeezing, right? Weekly we said bearish, daily we said bearish, 4-hour chart we were waiting for a trace or divergence with us. We got a bearish hidden divergence. You go to 1-hour chart, you find yourself the confirmation. You got yourself the confirmation with the divergence as well, and you can go and squeeze it to find the ultimate entry, which could be done with here on any idea you want. Squeeze, minimize the risk, maximize the potential profit. The only disadvantages with this, there are two. One of them, it's more aggressive, meaning it requires a lot of art, right? To be able to confirm all these things, it requires much more. Let's admit it. Right? It requires much more. So you need to sit more, you need to watch more, you need to wait more, and be able not to press the button too fast. Like here, for example, that could be very seducing for some, right? So you need to be able to wait through that, squeeze, and then boom, hit the button and do it. It works for you, Andre. For many others, especially the new traders, this is something that cannot work, because it requires much more advanced approach. I'm very proud of you to make it work, and it's a very smart thing to do. That's what we were doing in the options trading. Exactly that, to squeeze the positions through all from the bigger view to the lower view to find deviations. Lower range, sorry. So higher range to lower range to find deviations on numbers, and boom, attacking. That's exactly the same principles, okay? Great, let's continue, guys. So euro pound was the first the other one of the euros to pay us what we wanted. We have the euro franc that finally gave us the continuation up on the second leg. Finally got us the breakout, got us the payment, right? And we got ourselves the second wave now into the range. And as we know, we want two waves or a range to go for sell, and we got ourselves false break on the top, false break on the bottom, retest of the top of the range. So basically we can say it's completed. And the 1-hour chart, well, it didn't provide really classical two waves to work with the 100. We do have the 161.8 on a double cycle, and we have this continuing divergence. The best? No. Okay, is it smart? 100% yes. Is it correct? 100% yes. What do we do in that case? Again, we can mark the last trend line on the lower time frame and start trading there. We don't have beautiful trend lines on the 15 minutes to work with anywhere on the way. So here, system trading or step trading. What is the step trading we are applying? 1, 2, 3, boom, breakout. That's the only way for the short-term trading. Okay, so reminder, our direction on the euro franc is bearish for the long term. The 4-hour chart got us the confirmation of the range we were talking about finally, because we were looking for this push up. It happened yesterday. It paid on the upside short term. Now it's the time for the longer term. Bottom line. Next one, dollar franc. We are bearish there on bullish there on the short term up to 0.94, 0.95, where from we are going to switch bearish again according to the higher time frames. This is what we have here developing. We are coming to the 61.8. Note, it is cleaning these highs currently. You see that? Right? Those who went short, it's cleaning the highs here. So it's good. And the more we rally, the better the short should be right after that. The divergence already developing. So be aware of that. We should get the confirmation through all the time frames and then be able to get the breakout and the trade. I think that there is a good chance we are going for the extension right here. Okay, we should be by ideal cleaning this level, this spike, by ideal. So get it here slowly and get it there right after that. That's my view. That's what I would love to see. Once it's completed, go and start applying the cells. Meanwhile, yeah, there is a great chance the short cells will start to do something like that here, but I suspect of this. The reason is exactly because of the way I explained it yesterday. We had the cycle on a daily chart, 1, 2, 3. So we need 2 good waves on the 4-hour chart, which are currently happening. And the 61.8 is slightly higher. And we cleared 1 false break, 2nd false break, and this would be simply classical clearance, boom. So eyes on the dollar franc, and those who are riding the short-term buys, which are correct in the short term, triple, double, with the double bottom right here, with the bullish divergence right here. Okay, so basically it's 100% according to the plan currently. Next one, for the euros, EuroCAD. EuroCAD, we are bearish. Do we have a good divergence to sell on the 4-hour chart? No. Do we have 2 waves on the 4-hour chart? No. Do we have divergence on the 1-hour chart? Bearish hidden because we need the trend going? No, we don't. Do we have 2 waves on the 1-hour chart? No, we don't. Is the EuroCAD smart to be traded, guys? Once again, I want to go through the questions with you so you know the answers. After we got the confirmation with the convergence, we want 2 waves retraces, right? Did we have 2 waves retraces on the 4-hour chart? No. Do we have 2 waves retraces on the 1-hour chart? No, because we don't have nowhere 2 candles rules corrections. The bottom line is the EuroCAD good to be traded? Yes or no? Who can answer the question here? I have no, I have no, I have no, I have needs more confirmation. That's correct. Exactly. Beautiful. You see, guys? And let's face the reality. Is it tempting at this stage? Yes or no? Is it exactly? Oh yeah. Oh yeah. Exactly. Andrei, this email was from me. It was saying that Vladimir here, no? About the EuroCAD. Yeah, of course. This email was from me. I was writing that. I dedicate my time. When the things are belong to me, you always in my emails you will see first of all who is writing that, and at the end my own signature, or my own name, and the signature of the club. That's all. That's how you know this mail is mine. I always put the time for that. When I have to say something, that's what I do. Okay, so EuroCAD, you guys said it correctly. We have currently no setup. And yes, it's tempting. Oh, yes. So badly we want to press the button, but we have no reason. What could get developed here? Head and shoulders. That's a heavy possibility right now. We are bouncing a false break of the first shoulder. Pretty serious sign many times. Let's see how it develops. Currently we have nothing to do, so no rush. We need clear wave, clear retrace. Even if that does something like that, no problem. We will be looking for the retrace and the validity. Why to rush? Right? Why to rush? Well, unless you are using systems, and systems are different rules. Great. So EuroCAD is another one we have. The Euro Aussie, bearish as long as we are below the top of the range. which means two waves retraces, and we got it. Oh, that's not beautiful. That's perfection. 1, 2, bearish divergence, and that place exactly we drop to lower time frames to squeeze. And what an amazing squeeze we have here. It's not beautiful. That's what's called perfection. We found the direction on the daily and the 4-hour chart ranges. The situation there was clear. The two waves up were clear. And this is simply amazing. 1-hour chart, two waves with the divergence. Once you have that, you squeeze that lower to find yourself the better risk reward. And that's all. I think the 1-hour chart would give pretty much the same. Pretty much the same. So that's all. One-to-one risk reward is developing. Stop loss to break even, you are risk free. Exactly, Andrei. Exactly. Just bring the pips. Okay, yeah, so this pair also unchanged for us. Okay, so just following up the trade. Now I do want to show you the Euro Kiwi, guys, because this one is developing beautifully. If you remember yesterday, we were talking about short-term rallies, right? Which we will want to sell later on. And so far, this is exactly what we have. One-to-one. The 1-hour chart gave us this trendline breakout with the bullish hidden divergence confirmation here. That was the breakout, right? That was the special cycle right here. Special, triple, doesn't matter. Two waves down, and we got that breakout. The beautiful rally came right to there, right to the point. I'm maybe even not sure we have any divergence now against. No divergence against. So this trade is still ongoing, of course, and it's still bullish. It becomes for us bearish again once we break this trend line. So the more it rallies, the closer it should be after that for the breakout. Once it has the break, we have the sales confirmations. From this point on the lower time frames, retraces and sell. Confirmation in a confirmation, you get yourself safer entry. Okay, so that's for the Euro Kiwi. Again, going to the plan. And I want to pay your attention to the Euro Yen, because Euro Yen has the second false break right now here, and the Euro Yen has triple up. We now are waiting for double up, the double down. Sorry, here, triple up, one down. If we can figure out the second down, this breakout would give us the buy short term, because our long term is only for sales, of course. Okay, so we have the first leg, we want to see the rally, we want to see the second leg and the breakout. We have it, we have the short-term buys for us, guys. Okay, keep an eye on that one. This is what is developing right now. What do we do if we don't have two waves? If it just keep going, what do we do in that case? Exactly, we don't buy. Beautiful, we don't buy. Very simple. Very, very, very simple. If we don't have our plan fulfilled, completed, created, it means we can trade it. Plan the trade and then trade your plan. Okay, very, very, very simple in terms of follow-ups in that conditions. Great, let's continue. Cat Franc. Cat Franc, we want two waves down. That's exactly what is happening right now. This is our current trend line. It has to be broken. Well, we also don't have the divergence yet. So patience is required with this one. Our invalidation for the bullish expectation is this. This is our invalidation. If we go below that, we are not becoming bearish, we become neutral, simply because we will be waiting for the next confirmation to form. But as long as this holds, we are after buys. The best ways for us to look for buys is the two ways retraces followed by bullish divergence and go for buys. We can't get bullish hidden here, at least as for now. And we don't have any other bullish divergence yet created. Therefore, we are waiting for the divergence to form and then the trend line to break. Very, very important, guys, okay? Very important. So that's for the cat franc. Aussie Kiwi, our monster. We were waiting for the two waves retrace down. We got them right here. We got the bullish hidden divergence. And we got, you see guys the difference between this and the cat franc? The setup is the same setup. But this one confirmed by bullish hidden divergence and on the lower time frame by a bullish continuing divergence. We cannot ask for more. The breakout is here, the risk reward 1 to 2, and we got ourselves the risk reward reached pretty quickly, within few hours. What's next? We remain bullish there. Up until where? Up until the 4-hour chart will complete its correction. This is the triple descending cycle, so we expect at least the 38.2, very likely even higher to 50. And from there, we will have to be careful because we will have to see if we are going for one more high or are we going for another clearance lower. It would be open in that case. Meanwhile, nothing changed. Everything remains on. Okay, so Aussie Kiwi, those of you who are longs there, short-term risk reward reached, 1 to 2 risk reward, simply beautiful. The next target 38, 50%. Okay, that's for the Aussie Kiwi. Another pair that follows what we wanted to see. Pound Kiwi, bullish. Now there is one problem with the Pound Kiwi, only one problem. This trend line. What's the problem with this breakout? Who can tell me? Exactly. The stop loss. Beautiful. Does it make sense? 1-hour chart, 140 or 50 pips stop loss. Doesn't make any sense. So in that case, we need the lower terms retraces and a bullish divergence to form. This is the 15 minutes. Do we have the divergence here? Not on this place. The second one we do, and again the stop loss. And again the stop loss. 80 pips on 15 minutes time frame. Again, no good. No good. Too big risks. We want to see clearer risks, smaller risks. Right? So if it's 1-hour chart, it should be 40, 50 pips, normal. 1-hour, 15-minute charts, normally even less. 80 pips on 15-minute charts, no go. No go. So we are waiting for a better risk reward in that cases. Very simple. Okay. Andrei, Aussie Kiwi has got the 1-hour chart bullish Scorpio, but there is no MFD yet. Does it mean we don't have momentum? No, you're waiting for the MFD. Once the MFD changes, you get yourself the confirmation for the turnaround. Yes. Yes. Okay. Kostas, that's a good question. Do the pound pairs have more range of stop loss? The answer is yes. The best way to measure the stop loss basically is, well, at some point you will be able to do it manually with your eyes. But there is a beautiful indicator, average true range. Just get yourself the basics. And this way you know what's normal. Where is my pound? Where disappeared my pound Kiwi? Sorry. So you add yourself the average true range, and what you can see yourself here, that's the value you have. So if on the place here you have like 30 pips up to 60, let's say 2 of the ATRs, that's normal. That's normal. For intraday, you can respect even up to 3, but 1 to 2 is a normal stop loss. And if you go for 100 pips stop loss or 140, when you have the 2 ATR to be around 60, it's kind of right? Well, yes, Andre, you can use it also for take profits to know your possible value to run. Yeah, there are many uses of that, but the very common one is for the stop loss. So ATR is a solution for to know when the stop loss is out of normal range. So 1 to 2 is normal, 1 to 3 is a bit extended. It's okay for intraday, especially after quiet hours, right? But if you see, let's say, stop loss of 140, while the normal range is 60 or even 90, it's not good. Average true range, the idea of the average true range is the average acceptable range on the current market conditions. That's what it means, okay? Yosef, does the pound kiwi look like inverted head and shoulders? Where? On what time frame? 1 hour chart. Got you. This one probably, right? Yeah. Well, yes. From my experience, they are most reliable when they are at the end of the down move. Since you are rallying here, it's kind of tricky to rely on something like that. But it doesn't change the game because it's also a bullish pattern, and whatever happens here, 2 waves retraces are still is the preferred buy. Okay. I have here a long position for myself. I told you guys I'm going with this monthly cycle and the weekly triple extending cycle, the bottom of the daily range. So I myself have it as an investment, and with very long terms, without swaps because the swaps can be killing here. So very tricky. I'm mainly investing, Andrei. Almost the complete of my own trading is investment, long-term trading. You will never see my on my own money, yeah, the living money. You would almost never see myself short-term trading. No, simply because I have no need. Simply no need. I have no problems with waiting, and once I get paid, I get paid. There is nothing better tool than patience when it comes to trading. Nothing. The most important thing. Patience and the ability to find the right timing, right? Not attack just because you want to attack. Okay? Kostas, you have private questions? You ask in private place. Told you that many times. 20, 30 times, yeah, exactly. Is it better risk reward with investment? No. No. It's not better risk reward in investment. It's much safer. You are not exposed to all the noises. You are not exposed to all the craziness that is going sometimes in terms of the charts. Much easier way of trading, easier to make conclusion and decision, and same risk plan. I have my maximum risk where I get out of a cycle. Whatever happens, if I'm wrong, once I reach my maximum risk per cycle, I get out. What do you think the money flow is for investment, Andrei? The same story. The only difference between short term and long term is the time frames you are working with. I'm working with weekly cycles and daily cycles, monthly sometimes when they're obvious, like here. But the cycles for entries just different, weekly and daily ranges. That's all. There is nothing ever different. The idea is the same. Higher time frame directs the money, the shorter time frame money flow, not the vice versa. What you see on weekly and daily, that's what you should trade on the 4 hour, 1 hour, and 15 minutes. That's the right thing to do. Okay, guys, let's continue. Yen pairs, we discussed about them, still bearish. Euro yen is one of the only creating the possible double we wanted to see. Pound yen still stuck in nowhere. I wouldn't deal with that. The only thing here to pay attention to is the possibility of the range. We have the false break on the bottom, false break on the top. So we might be dancing around. And now on the 1 hour chart, we get this possibility from the bottom of the range. So if we break that, another pullback for a retest, and we can see the top of the range maybe visited. But it does not change the game for the longer term. That's also what was explained yesterday. The long term is a sell, so, which means it's much safer. Which means sell is much safer. Sell rallies is much safer than buy bottoms. Much safer. That's all. It's very, very important to remember that. Okay, these little things. Okay, pound Canadian. We are following the low for the breakout. We don't have the low. We don't have the convergence. We don't have the convergence. We don't have the entry. And etc. etc. It all remains the same here. Pound Aussie. We are looking to sell the rallies as long as we are below the top of this range. Right. Yesterday we got the rally. We got the breakout. Not sure even we had divergence there. Ironically, we did, but this one would be closed on break even in that places. You have the divergence right now against you. Must move to break even. So there is no way to make money out of these setups. Ironically, it is. That's what I was checking, Costas. Ironically, it is. Two highs, two last highs, dropping down. But you have also the bigger divergence, so it doesn't change here nothing. Right, on the entire view. Oh, sorry. On the entire view, on the big view, you have the divergence there. So anyway, the idea here is very simple. You have the divergence against you. You can't make money on that. So it's on break even. So what do we need in that case for pound Aussie? Two waves up and another look for sell. Currently we don't have it, so we don't trade. Simple. Answer yourself the immediate conditions. Do we have the set? Do we have the conditions right now? No. Leave it. It needs at least several hours to recreate this double wave, right? So waste of time to deal with that for today, because it's almost end of US session. What else was on my list to update? Euro. Oh, Kiwi CAD. Kiwi CAD. Guys, is that a good entry? Yes or no? We explained yesterday the terms of the divergences. Bearish hidden when we don't have the two waves retrace. Is that good? Yes or no? I have one no. Who wants to try? I want to remind you guys, weekly bearish hidden divergence, daily triple cycle bearish divergence turned to be a fake convergence, 4 hour chart, two false breaks. Sorry, 1 hour chart, 2 false breaks and convergence. Once we have that, is that a correct approach, yes or no? I have no, I have no, I have no, I have yes, yes. 3 versus 2, who else wants to try? Beautiful, that's what I was looking to see. Is there a bearish divergence after the convergence? That was the convergence. Is that the bearish divergence after the convergence? It is, yes or no? It is. Right where? Right inside the Fibonacci retraces. If we have the confirmation for that on the lower time frame, for this divergence, then is that correct? Yes or no? We had the convergence, we had the bearish hidden divergence, and we have the confirmation for this divergence, again on the lower time frame. Beautiful, of course it's correct. Why it's not correct? 2 candles rule are in play. This is the last 2 candles rule right here. Of course it's in play. Of course it's correct. Why would it be wrong? It could be a bit more aggressive, yes, because we don't have the 2 waves on the 1 hour chart. Yes, agree. But of course it is correct. After the convergence, remember what I explained yesterday on the Kiwi CAD and also the Euro CAD? After the convergence, 2 false breaks and convergence, we were talking about the sell limits. When it's correct to use sell limit, when it's not. And this is exactly where it lies in. The idea of the sell limit, any limit, could be applied in 2 situations. Once you don't have the time to watch your better setups. You can't watch better setups. That's all. Simply can't. So that's where the limit is coming for your help. Second one is when your limit is triggered with a divergence for continuation. Since the weekly is bearish hidden divergence, daily is triple cycle with the bearish divergence, 4 hour chart is a bearish divergence, and the bearish convergence, you have an ongoing trend. This is what is called ongoing trend. All the time frames lined up in the same direction. And in that place, bearish hidden divergence represents what? Trend continuation. And on the lower time frame, you would find yourself the double wave. Is that more aggressive? Yes, of course. Is that correct? 100% yes. Okay, guys, is that clear? Wanted to explain that because got questions about it. Rajiv, of course you do. Cycles and divergence, that's exactly what we do here. In the report, you have here all the important webinars, okay? On your time. Of course, if you are interested to learn what we do, then you have to go over these webinars and apply that and learn that. That's exactly what we do here. We define the money flow, so the trading in these directions is easier and smarter. By the way, guys, what we did, thanks to Jordan, not we did, Jordan did, was to create the links for you. So now you don't have the names, you just click on that, and it opens you directly the media zone with the email. You click yourself your data, okay, and you go yourself directly into the media zone with this video. So thanks to Jordan for this easier solution now. Just click on that and it will directly exactly there. Okay. Are they video downloadable? I'm not sure if they're downloadable. I'm not sure. Those that are on YouTube server, I think they are. I think they are. I think they are. But I'm not sure. I think they are. But they are anyway. They are there anyway, so you can watch that whenever you want. Okay. The most of the videos of ours are located on the YouTube channel we have, unlisted, so it's only listed for the club. So you can watch it from inside. Okay. All right, guys. So wanted to go over this Kiwi CAD. I want you to understand why this is correct. Don't have doubts when you have yourself an ongoing trend. Okay, and again, when it's valid to set sell limit in two cases: when you are not around for better risk reward entries, and simply when you have ongoing trend, all the confirmations, weekly, daily, 4 hour, all the same place, and you have yourself the convergence after the two false breaks. That's when you get yourself the okay to go. Indices. Attention, attention, attention. Attention, attention, attention. The trend line of the DAX. The trend line of the Dow. Still far away for the Dow, but still attention. The trend line for the UK FTSE. Okay? Attention. Muhammad, what do you mean? Well, you are out, so I can't answer the question. Or probably some connection. What do you mean? What question? I don't see any question. If I see question, I reply. Okay. Andrei, it's not usual way how the convergence shows before the divergence appears. What do you mean? I'm not sure I understand. It's not the usual way how the convergence shows before the divergence appears. Oh, well, yes, but what I mean is that a convergence could come without a false break, basically, and then it's not usable. Or when you go against a trend, you have only one false break, and then you have not enough confirmation because you need two false breaks and then convergence. That's why I say when you have the full package against the higher time frame trend, two false break convergence, then it's in use. Okay, great. Okay, guys, so attention for the indices because the breakouts are about to happen, which means once they are, we are for sell rallies. Okay, attention to that, guys, because this is exactly what we are following and want to start to trade. So commodities we discussed. Oil, we have the bounce from the trend line. We have the trend line we want to follow. Break below that, we can start looking for the sell rallies. And cryptos, our view is unchanged by the retraces. Well, not much changed in yesterday, to be honest. So the idea is the same. Two ways retrace. We want to go for buys. Nothing changed there. The only one that starts to be extremely interesting is where is that? Here. Remember what I told you yesterday, guys? The Ethereum versus the Bitcoin. I want to see the clearance here. I want to see this clearing, divergencing, breakout. I think this could be an amazing opportunity. So have your eyes on this one, let it form, and don't miss this out once it happens. Okay, so that's all for today, guys. That's basically what we were waiting for. Look at the euro versus the pound, giving us the beautiful drop finally. Let's see if it can continues for us. Bullish hidden divergence starts to form. Pay attention. You know what to do when to move to break even and free yourself the risk. That's all for now, guys. We have the market going with us, with our directions on the majority of the pairs. Some of the pairs still did not form for us what we wanted to see. We saw the importance of the risk reward over and over again, the importance of timing over and over again, even if that means don't trade sometimes, right? And the importance of the ongoing trend. Ongoing conditions are when the time frames lined up, when you don't have differences between time frames and different possibilities. Then you have ongoing trend. Then the hidden divergences come into play. That's where the euro pound came in play. That's where the New Zealand and Canadian came into play, etc., etc. Okay, and the euro kiwi and the dollar franc. That's when it's so important, when we have ongoing trend. Okay, I've been asked a lot about that recently, so that's why I am bringing that inside for you guys, so it's easier for you to understand. No, that's not non-farm payrolls week this week. I think the non-farm payrolls is next Friday. It's not this Friday, as far as I'm aware. Yeah, it's not this Friday. It's the next Friday. Okay, Andrei, you're very welcome. Guys, thank you very much for being here, and I wish you a wonderful evening, day, and I'll see you tomorrow. Thank you. Bye for now.